In this presentation, we're going to add a payment related to insurance to our financial statements with the help and use of bank feeds. Get ready, because we're about to engage with Sage Business Cloud Accounting. Here we are in our Get Great Guitars company summary page within Sage. We're going to be opening up our financial statements first, going to the reporting drop-down and opening up that balance sheet report. Once opened, we're going to duplicate the tab by hovering over it, by mousing over the tab, right-clicking on it, and duplicating that tab. Then we're going to go back to the tab to the left, and we're going to do the same thing again to the P&L, profit and loss income statement. Hovering over the report till it opens up, and then we're going to go to the P&L, profit and loss income statement. Then we're going to go back up top to the tab up top, right-click on that one, and then we'll duplicate it again, having the balance sheet and the income statement. I think the dates will be okay, but let's just double check them here. Dates look okay on the balance sheet, and let's take a look at the P&L. Look good as well. I'm going to start it on 4/1 because I just want to see the current stuff that's happening right here. This is just the current stuff we did for the current month and not get it all muddied up with the last month. And so then we're going to go back to the first tab. And then within the first tab, we're going to be opening up the banking. So let's go to the banking so we can see that banking information. We are, of course, dealing with those bank feeds. So we've entered the bank feeds for the second month. We've got 12 of these items left that are still in limbo that we're going to bring on over to the financial statements. But this time looking at the insurance. So we've got one in here somewhere for insurance. Here it is. It's right up at the top. So we have the insurance. Now, insurance is a little bit different. So I just want to discuss the insurance in general. Once you have whatever you're going to do with insurance down, then you can save it and the bank feeds will work great and it'll go wherever you want. It should memorize the transaction and give you the correct suggestion for it. The thing with insurance, however, is oftentimes, unlike any other expense, obviously any other expense typically, or most other expenses, you pay for it after you do the work. So in other words, after the work was done, like the utility bill, you use the utility, then they bill you for the utility you used. And the phone bill, you used the phone, then they pay you, then they charge you for the phone bill that you used. The insurance, however, is something that they haven't given you yet. It's going to happen in the future. That's the definition of insurance. It's something that you're paying for now for the service of coverage in the future. Oftentimes, also, you end up paying for more than 1 month of insurance. So if you pay for like a year's worth of insurance, then it's going to be covering you for a year. It's going to be benefiting multiple periods in the future. So that being the case, the traditional thing to do on an accrual method, if we were going to deviate from a cash method for this reason on an accrual method, we would put it on the books as a prepaid account, and then we would allocate the amount each month as it's been incurred. Why would we do that? Well, if we don't do that, what happens if I just record this like to insurance expense, which will be like what we would instinctively do for a cash basis? Then what's going to happen is the current month of April is going to have $11,000 of an expense, and then May will have no expense related to insurance. So when you compare the two, that the matching principle will be off. And as long as you know that might be, you might be okay with that. It'll be easier to do it, to just expense it. Or you could say, okay, I'd rather, put it on the books and do the accrual thing with this particular item or any kind of large prepayment, in which case I'll put it on the books as an asset. And then I'll have to take the step of basically doing an entry, a journal entry, an adjusting journal entry at the end of the month or year, allocating it back to the expenses periodically, so that in that way April and May would match. It'd have the same amount of the expense because on consumption rather than when you spent the money. So the basic idea then is you want to talk to your accountant on it, possibly say, hey, what do you want me to do with the prepaid insurance? The easy thing to do is just to expense it, because then you don't have to do those adjusting entries at the end of the period. If you're going to do the adjusting entries at the end of the period, then you want to put it into the prepayment. It's easier. You could still expense it and then do an adjusting entry to take it out of the expense. But because the expenses are temporary accounts, it gets a little messy because they roll into the equity account. So the traditional method then would be to take the insurance, put it on the books as an asset, and then allow the accounting department or the adjusting, your tax preparer possibly at the end of the year, whatever, to do an adjusting entry periodically at the end of the month or the year. So those are your two options. Either you put it to insurance expense, noting that the matching principle will be off and you'll have a very large expense in one period as compared to the next period, 1 month compared to the next month if you paid for multiple months of insurance at one time. Or you put it on the books as an asset, which is the correct, like accrual kind of method, but then you have the added work of adjusting it periodically, which you can do yourself or depend on your accountant to help you with. I'm going to put it into the prepaid just to give you an idea of what that would be like. This is the traditional prepaid insurance thing that it would work with. Any other thing that you make a prepayment of would be the same. If you pay for like 12 months subscription to software, which is very common these days, you have the kind of like the same issue, right? So you paid for the 12 months of expensive software today. If you just expense the whole thing that you're going to be using for an entire year, well, then you've kind of distorted, 1 month compared to the other month. So how do you avoid that? You do this method, the accrual method. Okay, so I'm just going to say this is going to be the company name. Same process here. I'm going to take that name, bring it on over, and we're going to make a new item here. It's going to be an electronic payment again, so I'll make this an electronic payment. Let's see if we have a prepaid account. I'm going to type in prepaid. So they have a prepaid expense account. So prepaid expense, we might just use that, or we might want to get more specific with like a prepaid insurance. Let's get more specific. So let's go and add the account. To do that, I got to go to the GL, which is probably good that they give that. They don't just let us add accounts on the fly, which, there's pros and cons to that. But in any case, I'm going to go up top. I'm going to right click on this tab, duplicate the tab, and then we're going to go into the general ledger. So I'm going to go back to the accounting up top. That'll take us to like the home page within Sage. And then we're going to be going on over to the settings. They call it the summary page within Sage, so it sounds even better here. So we're going to go over anyway to the settings. Let's go over to the settings, and that's where we can find the good old chart of accounts. So we're going to go down under the financial stuff over here, and that's where our chart of accounts is. So we're going to open up that chart of accounts. We're looking for the asset type of account, and we had a prepaid asset here, so I just want to pick up the same kind of number. So prepaid expense was 14. Let's make it like a 1410 then. 1410, 1410, 1410, 1410. I'm going to go to new ledger account. 1410, and put 1410 here. And then this is going to be prepaid insurance. And then I'm going to say the same name for the display name. And then the category is going to be an asset. So it's going to be a current asset type of account. Current asset type. So that looks good. I'm going to keep the defaults down here. That looks good. I'm going to go ahead and save that. So then we have this one up top, prepaid insurance. Now that that is there, let's go back on over to the first tab and see if we can find that one now. I'm going to say prepaid insurance. There's the one we just made right there. 1410. So I'll pick that one up. Didn't pick it up. It didn't do it. Let me do it one more time. See if I get it. I'll get it. There it is. Okay, so when we make this one, what's going to happen? It's going to decrease the checking account. The other side not to go into an expense, but rather increasing an asset, that being prepaid insurance. Let's go ahead and do that and then check it out. So we'll do it by hitting the create button. We'll check it out by going over to the balance sheet. Then we're going to calculate the balance sheet. So that'll recalculate the balance sheet. If we go into the checking account, we should see a decrease to it for the entire amount of that we paid for like a year's worth of insurance we're saying here. That's going to be for the $11,000 sometime in April. Scrolling on down, then there we have it. Where is it? It's right there. There it is. So there it is, and then we're going to go back and see the other side, which is not on the income statement this time, not on the P&L, but on the balance sheet. So it's on the balance sheet here, prepaid insurance. There's the $11,000 showing up in the current assets section. So when's it going to hit the income statement? Well, generally at the end of the month, you would take, a month's worth of this and adjust it out of here and put it on the income statement each month. So you take like that 11,000 divided by 12 and you take out that 916 and apply it to the income statement each month. So it's a bit more work to do that. Note that over here on the income statement at this point in time, we don't have anything over here for the insurance expense. So what are the pros and cons of this method? The con is, of course, that it's a little bit more work. At the end of the month, you're going to have to do this adjusting entry that's not cash related. It's an accrual thing, and it'll pull over just 916 of the 11,000. So that's going to be the problem. With the pro of it is that if you didn't do that, if you just expense the entire 11,000, then you'd have a distorted comparison between one month to the other. You can imagine the 11,000 being here. And if you compare this month to the next month, that expense could distort your books. So you got when you then review your books, you have to take that into consideration. So if you just expense the entire thing, which is easier to do, then you just got to take into consideration. Oh yeah, that's the insurance expense that really is going to be helping multiple periods, and so you have to take that in consideration. And note, it's going to be more confusing to do that these days because, again, a lot of people have software type of subscriptions that they subscribe to that could be quite significant depending on the type of business models that they have. And if you have a lot of those payments that are happening at one point for like a year's worth of service, then it could distort your decision-making process. So if you do it with a prepayment and then apply it out, then you can see what actually is happening from a month-to-month type of basis. So prepaid insurance is the standard kind of prepaid thing to use for this kind of example, but there are more and more examples these days in anything that you prepay, you have a similar concept for. So that's it for now. Let's get out of here.